Welcome to the daily update, where I'll go over the action in the market for Friday, October 3rd, and we'll see how things look for Monday, October 6th. Really sleepy day. Here we were in anticipation of the employment situation report, but because of the government shutdown, we didn't get that. We did get some other data that I'll go through here in just a moment, but the market's holding up all right. Now, we did set a new all-time high. My goodness, we were virtually unchanged, but because we set an all-time high on Thursday and Wednesday, any kind of an advance set another new all-time high. We closed off of the intraday high that we set earlier in the session. So it's kind of positive in that the market is holding up, but some of our indicators, since we're not seeing a lot of follow through to the upside, they're drifting down a little bit and kind of recalculating and seeing not so much some weakness, it's more of a lack of strength. That may not make a lot of sense, but without uh, uh, these driving forces, the economic reports to really lead things, we have to look for other areas. And so it's looking positive overall with how the market is doing in spite of the government shutdown. Okay, so at the open, we had a higher open. Futures were positive and not really positive. They actually drifted down a little bit, but that still gave us a higher open. And we climbed above R1 at 67.34. We got up to the 67.50 level. That's another round number that we're now dealing with, but we didn't get up to R2 at 67.52, just a couple of points below that. Then we declined. We saw things start to shift. We went back below R1. We went negative after dropping below the unchanged level. We did find support at the daily pivot, 67.14, right around that level. And then we just closed slightly positive. We were up 0.01%. My goodness. Yeah, virtually unchanged on the day. Volume was below average. We are seeing that dropping down. Yeah, when we look at all three time frames, we're still positive. We're still well above the 20 period moving average. That's the short term. And we're also above the 50 and the 200. So that's looking okay. Interest rates did tick up a little bit, but they were down on the week, and that's been helping stocks as well. And we'll go through some of the economic reports here, but not really seeing any concern about inflation at the moment. Even with all the different geopolitical things going on, nothing that's really having an impact on the market. And we can say that for pretty much all of 2025. Little bits and pieces here, little like pop news comes in and it rattles the markets or pushes the markets up. But for the most part, it's not having a continual impact on stock prices. So the Dow and the S&P did set new all-time highs, not very high, but again, because it was a positive close, that was another new all-time high. And it was not a real good day for mega caps, large caps, and tech. That's why we just didn't really go anywhere. We need these stocks to really kick into gear to drive things higher. And there was some Fed speak. Fed Chair Philip Jefferson, who's a voting member, said that both sides of the Fed's mandate. Now, the Fed is supposed to keep inflation under control the best they can and keep prices under control. That's a form of inflation and allow for a positive employment area or arena for the overall economy. And that's kind of their mandate. That's what they're all these things that they do, that's what they're trying to help with. But he says, this is under pressure, where they're worried about inflation going up and employment going down. And he will continue to assess the incoming economic data. Well, we all do that, but there's not any incoming economic data right now because of the shutdown. And then Goolsbee, who's been talking a little bit lately, also a voting member, cautioned against front-loading cuts. All right, so the market has pretty much figured in, based on what he and other Fed or FOMC members have been saying, that, okay, yeah, it looks like we're going to cut in October, coming up at the end of this month. We're probably going to cut in December, and at least having one cut into 2026. And now he's like, okay, don't get too far in front of that. Now, as I've been pointing out over the last few videos, so why is the market going up? If the market's getting ahead of itself as far as rate cuts, and as close as I can tell, it's because we're not in a recession right now, and the market doesn't think we're going to go into a recession. And it was promised ever since 2020, and then all the money comes flying into the economy and into the stock market, and then inflation seemed to start to get out of control. It's like, okay, there's going to be a recession. There's going to be a recession. Well, here we are coming up towards the latter part of 2025. We're going into the fourth quarter, and we have yet to be in a recession. And that's when earnings do better for companies and stocks do better in that kind of an environment. And then Moran, also, who's been speaking a little bit lately. I also call this the Federal Open Mouth Committee because they like to talk and stuff. I just I can't see these people getting into a room with each other and having them not all come out bloodied, because economists tend to be really convicted by their opinions, and you could have two economists talking and they could come up with three or four conclusions. But Moran noted that a housing shock could alter his inflation outlook. Well, yeah, it probably might alter a lot of folks' outlook on a lot of different things. I'm not saying that this stuff is useless because the market pays attention to this. And you have the rock star hedge fund managers who, it's like we've known this all along, but it's like when they come out and say it, that makes it more gospel, that people are like, oh, that's what he said, even though we've been seeing some of these things all along the way as we go along. But on a short-term basis, we're seeing a little drifting a little bit down in the positive conviction in the short term, but we're still getting pretty positive readings with the Williams percent R, CCI chart, stochastics. The one that's a little bit of a concern that's not always on this list is the short-term RSI. We're still above that 70 level. That's looking a little overextended. Intermediate term, now this is coming down and actually has turned negative. The Chaikin oscillator, which had been extreme negative, it's now turned, it's coming down, it's below its moving average, so that's looking negative as well. So we could take this one off the list, but we're still far away from the 50 period moving average as measured by the boom indicator, getting a little stretch there. No change here. We can't really do any changes. Now, in the upcoming week, we're going to be getting the meeting minutes from the last Fed meeting. And the markets will be dissecting that to see what kind of clues they can get and how folks were discussing things at that time. But we won't get that until the middle of this upcoming week. The dollar was down, interest rates were up. We were at 4.12% with the 10-year yield, where we had been at 4.09%. They had been declining over the last few sessions and actually starting to look like they're trending a bit lower, but then we saw them bump back up a bit on Friday. And sentiment's still neutral. This is one of the reasons too, is you have people that just don't trust that the market should be going up, and it's going up. Sentiment should be up around maybe 65, 70, 75. That's when we start to get extreme, and everybody's just sure that the market's going to keep going up. They're not doing a lot of hedging. We see that in the sentiment gauges that we follow. Well, we're neutral now. So this actually, in a contrarian way, is actually helping the market to hold up, because you have a lot of people that don't think it should be going up right now. And we are positive with the trend. We're crossing further above the moving average with the short and intermediate term chart. So that means a strengthening trend, and it's positive with the green line above the red line. With this very slight update, we are positive with the bias, and I'm still keeping it mixed to positive here. You could say positive, but since we're not seeing any real conviction, but not any real negativity either, some of the things are starting to drift down with our charts, and that's why I'm keeping it more mixed. Okay, so we did get a few economic reports that came out. The S&P Global U.S. Services PMI came in at 54.2. That shows expansion, and that's up from the previous reading. So that's healthy on a global perspective there. Then we had the ISM Services. This came in weaker than expected, right at 50. Above 50 shows expansion, below 50 shows contraction. We're right on the fence now, where they thought it would come in at 51.7. Now, this was probably taken as positive by the market, because last week we were seeing stronger than expected economic reports. This week that we just finished, we've been seeing weaker than expected economic reports, and that bodes more for the Fed actually coming in and cutting rates to try to tweak the economy. And the ISM Services was actually down as well from the previous reading at 52. So here is some couple of charts that we did get here. The blue line, this is the headline number that we're seeing here, just coming right back down to 50. And for the most part, we've seen dips below 50, and that starts to show contraction. But we've been above 50, showing that they're now, you could also call this the services index because the US is more of a service-based economy rather than being a manufacturing economy, even though manufacturing still happens. But if we can stay above this 50 level, that would help keep things at least in a pro-growth type of stance. But the prices, this is a little bit of a concern. The market could have tanked on this. We have been going up with the prices component of ISM services. Okay, here's another way of looking at this. September ISM services, it's at 50. It's below the estimate. Okay, I just went through that. Driven by big declines in new orders and current, I have to move this thing, business activity. And I'm not into this date comparison thing. So we are seeing it dropping down, but coming in at 50 overall. This breaks out the different components a little bit here. Okay, so real investment advice has this nifty little chart here, real S&P 500 index. And what that is just taking inflation into account. That just, and then with valuations. And we've known this for a long time now. I go over this in the intermarket analysis video on the weekend. We've been overvalued. We continue to be overvalued. As long as we keep going up, we'll be even more overvalued. But there are the earnings behind it that are justifying prices continuing to go up. And so we're just seeing all of these continue rising now. And then new highs in October. Now we're only, okay, 3 days into October. Says new highs in October are a good sign. And this goes all the way back to 1954. And the number of new highs that were set in October and what the return was for the month and then for the whole fourth quarter. And it's positive. It gets more positive the further out you look. And it's well above what we see on an average basis as well. Yeah, Western Gold ETF holdings. I don't really hit gold all that hard, but we do keep an eye on it. We're seeing just a lot of money going into gold in the ETF, and that's what I follow in the intermarket analysis video over the weekend. And implied cash allocation, we're seeing cash levels really quite low right now, and not up here where they were before. And then earnings have supported the U.S. equity rally. This is what I've been saying. Not only in the U.S., that's the dark blue line, that's the S&P, but across the globe as well. We're seeing, for the most part, earnings are going up, and that is why stock prices go up. Commodities versus break evens. The yellow line here says the gap between commodities and inflation expectation has never been this wide. The yellow line, this is what is being perceived as inflation. And then if you ask me, which I guess this is Costa, okay, we didn't ask him, but he's telling us anyway, or her, which one likely drives the other? I would unequivocally side with the yellow line, my real world inflation gauge, since most goods worldwide are ultimately driven by commodity cost dynamics. And again, just to plug the intermarket analysis video that I do over the weekend, we look at aluminum, corn, wheat, because those prices going up can be inflationary as well. And this is suggesting that there is some inflation that is actually happening. Okay, then the Magnificent Seven positioning. The top line here, these are people that are long. That means they're buying low, selling high. And that's continuing to go up and likely to continue as long as the earnings are there to support that. Where neutral, that's been drifting down. And then folks that are actually short, that's pretty small as well, but not really moving all of that much. So this just suggests the Magnificent Seven stocks, that's where people like to be. All right, here is the chart. We did have a higher open and we got above R1. We got up to 67.50. That's just about where we topped. We didn't get up to R2. Then we did see a reversal coming down. We dropped back below R1. We actually went negative there. We held up around the daily pivot level, came up off of that, and then just kind of drifted down, and we're barely positive on the day. And not much of a change as things shut down for the weekend now with the futures. And so not without these economic reports, folks are using that as a way to just kind of pull back right now. And this is okay. When you look at the bigger picture here, the intraday growth and value lines, they're going up, but then we saw a bit of a drop off here. And growth did not have a good day in Friday's session. Value had a better day. And that's shown by this chart for the S&P, where we're actually looking a little bit more negative now with the intraday growth to value ratio for the S&P. But then we look at our end of day charts. Growth was down, value was up. And then growth was up less for the mid caps, and it was up a little bit more for the small caps. So we're seeing still not really looking all that solid with the small cap growth to value ratio. We're in danger of having a death cross here with this growth to value ratio. Looking a little more solid, this is probably the best looking growth to value ratio compared to the three that we look at. We're above both of the moving averages and in an uptrend, but the mid caps are just going nowhere as far as the index. This is a little more of a concern. Bigger picture, S&P growth to value is positive, but going back to the beginning of August, that's when we saw this drop down, possibly as the market was getting ready to go down, and this shows that it's becoming more defensive. And we really haven't shifted over, according to this ratio, back over into more of an offensive stance. We're still tending to be more defensive. And still looking okay here, but not showing an awful lot of strength with this growth to value ratio. This is holding up, but we're kind of topping out now. Tesla got pretty hit pretty hard after their earnings came out. And we're seeing staples going back up a little bit. And we're also, after declining, we're starting to go back up with the discretionary equal weight sector here. But this is better looking. This shows a little bit more conviction. And then we are positive in the short term with the trend, green line above the red. We're crossing back above the moving average. Also in the intermediate term, above the moving average, green line above the red. So that's still holding up and looking okay. And then we drop down to below average with volume. And sentiment, and this uses options Greeks, gamma in particular here, to try to give us some insight as to support and resistance. And so we closed at 67.16 if you round that up. That's where we're at right now. And this is actually going out a little bit. We do have like the 67.25 level. We're seeing some possible resistance there. Also at 67.50, way out at 6,800. These are round numbers. But as long as we're in this green area, the gamma exposure is leaning more positive. Now, if we fall down below the 66.60 level, or 61 if you round it up, that's when things would start to shift over more negative. So this is still looking more positive overall. But we're not seeing an awful lot of fear coming back in with the VIX. Now, we did climb a little bit above the moving average with the line chart and the bar chart down here, but we're well below 20. We're not seeing the negative seasonality, which for stocks, which would be positive seasonality for the VIX. It's just not going up the way it typically does during this time of the year. And this is another look, just with a cursory glance. Very rarely have we seen compression like this. The VIX is very low right down here, getting down to its 20-day standard deviation, very low reading here. And we've seen nothing like this and not seen a material move higher in volatility, meaning stocks are going down. Possible for the market to ignore it? Absolutely. It just hasn't done so very often. And we're not getting a lot of fear in the market when we look at the VIX. We are getting fear in the market when we look at this. This is the VIX to S&P correlation. This continues to go up. But we haven't necessarily topped out. This could still go up further than where it's at right now. But I tried to mark out the times here when we saw a very high reading with this chart, and then you can look down here to see what happened after that. Now, it didn't mean that we always had a decline, but typically, at least on a short-term basis, this one actually marked a bottom here. But so there are exceptions, but we've been seeing this now for about a week, and it just really hasn't fallen over into price action. And still not seeing all that much of a pickup in the volatility of the VIX itself. We're still below the moving average of the VIX with the bar chart and the line chart. This is also some fear creeping back in. We're seeing the volatility of stocks starting to outpace the volatility of bonds. Now, you wouldn't know that by just looking at the VIX, But when we do a ratio with stocks to bonds, we are seeing things picking up here. And so we declined with this fear gauge. We were also down with this other fear gauge. So some confirmation there, fear that is coming out of the market. And so then we look at the daily chart of the equity put call ratio. We're going back up, possibly some pre-weekend hedging that's going on because we've been getting very low readings with this chart. Also starting to go back up. It's still below this extreme reading here with the 5-day chart. And here's another look at that to show that when we get down below this green line on this chart, a lot of times that means that we're bottoming as far as the equity put call ratio, which could be some kind of a topping with stocks. But we've been down here for a while and it hasn't fallen over into price. And then this, we were getting a very low reading here with the 10-day moving average, and now that's starting to go back up. So could this signal that, okay, maybe we're due for some kind of a pullback? But we've been seeing this now for a number of days, and prices are holding up. This is another one that we're not seeing fear in other sentiment gauges, but we're seeing quite a bit of fear here. We've now gone beyond what we saw back at the last part of July before we had this little downward move. Now, it's looking at this point because we've been going up. If we do get a decline at some point, it doesn't look like we're going to see a bigger picture shift over to a bear stance. It might feel like that for people to get in at the top, but because we have sentiment so low, that still helps the market to continue to go up. We have other fear gauges that are pretty high saying, okay, we're due for the market to go down. We just haven't seen it all kind of coming together to see any kind of a pullback of any meaning, at least to this point. Advanced decline line looking good, setting a new all-time high based on price and volume. That internal measure is looking pretty solid. We're above the midpoint with the short and intermediate term advanced decline ratio. We're above zero, not showing a lot of conviction here, but it's still positive with the advanced decline oscillator. And we're looking pretty healthy. Another internal measure with the new highs, new lows, a lot of green, not much red. Going up with the 5-day chart and the 10-day chart. Now, we are seeing some weakness coming into our smart money indicators. We're rolling over, but we're still positive with accumulation distribution. But in the short term, we're starting to drop below the moving average, measured by the boom indicator. And we're negative with the chicken money flow, where the histogram is tapering off here and the red line's going down. And this is where we were extreme positive with the chicken oscillator. We've now declined below that, and we're below the moving average. So 2 out of our 3 smart money indicators are negative, with our third one that's positive in the bigger picture is looking more negative in the short term. Then we're pretty much flatlining here, not really changing all that much. Up a little bit with the red line, a little bit of a tick up with the green line, but in the bigger picture, the vortex is still positive because the green line's above the red line. Now we're still looking pretty good here too. We're actually finally breaking out, not with a lot of conviction. When we look at the cumulative advanced decline line for the S&P based on price, we are setting a high here, but we've been setting highs here based on volume, which under the surface is positive when you see volume leading price when we're moving up. And some improvement here with our advanced decline line studies, coming back above the moving average with the NYSE common stock, looking pretty good with the S&P, improving with the mid caps and small caps, but still below the moving averages. And then we break it out for the NYSE common stock, not really moving out to new highs here based on price, but we are setting new highs here based on volume. And again, that could be taken as positive in this context when we see volume leading price. And we've been seeing that now for the last number of days. Improving and above 50 with those stocks in the S&P above their 20-period moving average, but not showing an awful lot of conviction. We're setting new highs with the S&P, and this is lagging behind right now. We also have these negative divergences longer term, but a good solid up move could take care of that. We're focused right now more on the fact that we are positive, but we're trailing when we look at actual price action. And we're looking a little bit better here, but still seeing lower highs for the most part to this point with the 50-period moving average study. We're improving after drifting lower with the 100-period moving average study. And this is actually more positive longer term because for the most part, as we've been coming up, we've been setting higher highs here, not really setting lower lows. and we are improving, and it would be even more positive with the 200-day moving average study if we could come back in and actually set a new all-time high and have this continue to go up. So short term, we closed off of the highs. I mean, we were 0.01%. I mean, we were virtually unchanged. But this is still looking pretty good shorter term as we've been coming up. Also, when you go back to the beginning of August, we're still seeing a fairly healthy chart pattern. We did see a pullback here, but it hasn't really changed the integrity of this higher highs and higher lows that we have been seeing. And then for the second day now, we were below average with volume. So a bit of an improvement with the 20, 50, and 200-day moving average studies there. Above the midpoint, but not showing strong short-term conviction with the Stochk RSI. But we are still seeing positive conviction, but it's tapering off here with the Williams percent R. The CCI 14 chart is still showing good short-term momentum, as is the CCI 20. Coming down, kind of wearing off some of this short-term positive conviction with the short-term stochastic, rolling over, but haven't quite crossed below the moving average with the intermediate short term, but we're still above this 80 level, which is extreme. Longer term, we are looking more positive. We crossed back above the moving average, but we are extreme positive there. Looking good with our short-term trend based on 20 periods. Prices above the lines are going up. And we're still right on the border between +2 and +3 with the standard deviations chart. So that's holding up for right now as well. We did see a decline here, but we're still above zero with the balance of power, positive with the go, no go, darker blue, and still coming off of the highest high value here above an advancing midpoint with this chart. And we're on day 108 of this uptrend that began way back at the beginning of May. We're on day 102 of the proper order uptrend, but the TTM squeeze continues to drift off. It's darker blue and declining. That's actually negative, but we're not really seeing that coming through with price. And we're coming right back down to the midpoint with the force index, but we're still above zero. It's still green, so that's positive. And you can kind of see that these are Keltner bands, which are very similar to Bollinger Bands. They're getting closer to each other. The longer we stay in this kind of contraction of the bands, the more explosive the move is likely to be. It's like winding up a spring. All right, but we don't know. Are we going to break to the upside? Are we going to break to the downside? But it just, the market needs some kind of a catalyst one way or another to actually start moving. And just flatlining here, pretty comatose here with the ease of movement over the last 14 periods. Positive with the Arun, the oscillator is above zero, more buyers than there are sellers. That's why we're getting a positive reading. Then we look at the S&P McClellan oscillator, which is above zero and going up. Still seeing these negative divergences here longer term, but that could be negated if we continue to see strength here. And so we're going up with the summation index based on price and volume for the S&P. We're improving, but still below zero with the NYSE McClellan oscillator. So we're still declining with the summation index based on price, kind of leveling out here, actually holding up a bit better with the summation index based on volume for the NYSE. And rolling over a bit with the Swindler trading oscillator, turning down based on price, turning down based on volume after this had been positive recently here. So that could be a bit of a warning sign that way. And here's momentum, which is having a hard time figuring out what to do. This is an intermediate term oscillator, the PMO, where we are continuing to go up. So that's positive. Now, what we were seeing as we were working through September is we saw volume outperforming here above the moving average and going up. We were seeing price not performing all that well. Now we're seeing them more in tandem with each other. Price is looking better and volume is looking better. And we're above 50 and going up with the PMOs that are rising. We're just barely above 50 with the buy signals and holding out at a pretty high reading with the PMOs that are above zero. We've gone from positive to neutral. You can see how we closed down well off of the high with the S&P, but we are positive now for the third day with the parabolic SAR. We are drifting down a little bit here with the slope oscillator. This is actually more negative because it's below its moving average, but it's still giving us an extreme reading since we're above the green line. And we're looking a little bit more positive. We're trying to peak out a little bit above the moving average here with the MACD. This is short to intermediate term. So we're declining a little bit with the slope oscillator short term, but we're still going up with the true strength index, which is our other short term oscillator. That's conflicting right now. Usually we want to see these things going in the same direction. And we're pretty much flatlined with kind of a positive slant here with the intermediate term. We're starting to flatline with the two long-term oscillators, the TRIX and KST, but they haven't crossed below their moving averages, at least yet. Where we are negative with the Copic curve, we've dropped down below the red line. And we're no longer extreme with the Sean trend meter. We got up into this dark green area. Now we're seeing that starting to come back down a bit. Positive with the money flow, positive with the ultimate oscillator, positive with on-balance volume. We're still looking extreme with the short-term RSI. We're just below looking extreme with the intermediate-term RSI. This is looking good here. We're well above the 10-period simple moving average. All lines are going up. Prices above all three lines. And intermediate term trend, red line, blue line still going up. Price for the most part is above those lines. Intermediate term trend is looking pretty good. Above all the moving averages, all the moving averages are moving higher. That's why I keep saying if we do see any kind of a decline, we're going to be really watching for that 20 period moving average. And we're not far away from the 20, but we are far away from the 50 period moving average as measured by the boom indicator. And we're still more than 10% above when we look at the distance away from the 200-day simple moving average. And when we get up into this area, usually 12, 13, 14%, that's has preceded more significant declines than what we've seen up to this point. And we are positive, but not showing a lot of conviction with the bullish percent index. We're going back up with the NYSE bullish percent index and drifting up here with the NASDAQ 100 bullish percent index. And we're getting a praying bottom fisher. Now, we really haven't set a bottom here. We're not getting a really low reading with this chart. When we come way down here, that's usually where it tends to be more of a solid reading. But we could still take this as positive. I wouldn't use this all by itself, but we are starting to generate a buy signal with this chart. Not that we're hitting any kind of a bottom right now. All right, and then we are above this R1 pivot point, so now we're clearly above this. If we start to decline, this is another area that we're going to be watching for support, 64.68, and we were up 1.09% on the week. And we're still breaking out a little bit to the upside here with this long-term trend channel, which is positive, but a lot of times this is when we started to see things shift and at least show some kind of a pullback. But we just haven't seen that. But from a trending aspect, we're still looking positive with the Heiken Ashi. The Kegi chart is positive, Renko, and three-line break. So the trend is still looking pretty good there. And we had enough of an up move right at the open to get up to that 67.50 level that drew in a new X on the point and figure chart. And this is quite positive longer term. This just looks at price. It doesn't account for time, whether it takes an hour or a year for a set amount to for the S&P to go up before a new X is drawn, or if we're going down, a new O is drawn. And we are working off of this ascending triple top breakout that was generated back on August 13th. This is still quite positive. And looking okay with the 150 and 200-day moving average studies here. Positive on all time frames with all the different indexes. Negative with the dollar on all time frames. And the growth areas were down. Communication, tech, discretionary. These are the ones that ended up being down on the day, where we saw more value areas with utilities and healthcare, seeing some more advances there. And a lot of, right at the open, a lot of really nice things happened here. Canada, another new all-time high. NASDAQ 100 setting a new all-time high. Intraday, didn't close there, but set that intraday. Same thing with the S&P and the Dow. We did have the industrial sector setting a new four-year high. Healthcare having a BPI cross above 70 after just having a BPI cross below 70. And utilities back above a BPI cross in the 80 range where it just dropped below it. Dow getting above 47,000. NASDAQ, as we were seeing some weakness going into the close, it went down below the 22.7 level. So big red here, discretionary, Amazon and Tesla down. That didn't help. Not really any significant moves here with the big three tech stocks, and Oracle was down as well. But the financials, a lot of green there. Communication, Meta was down, Google just not really moving all that much. But then we're seeing a lot of green right now in healthcare and in utilities and even some in energy after it had been getting hit earlier in the week. The Dow just well off of its high, but setting a new all-time high here and looking pretty good after we finally were able to break above this dashed line here, which was an overhead resistance level for the month of September. And we are positive with the diamonds and coming off of recent highs here with the Nasdaq, but we've gone from positive to neutral with the Nasdaq with the Elder's Impulse system. Also closing down on the day with the Nasdaq 100 after having a fairly solid start, going from positive to neutral with the Nasdaq 100 here represented by the QQQs, and still right on top of the line, tending to go up a little bit here with the momentum of the Nasdaq 100, and still above this long-term trend line on the weekly chart for the Nasdaq 100 as well. Setting a new all-time high with the equal weight and confirmed with the equal weight of the QQQs also setting an all-time high, even though we closed down a little bit here in Friday's session. And we saw some initial strength here with small caps. They got right up to this R1 point and then closed well up off of that with the S&P 600, also closing well off of the high with the Russell 2000 small cap index, but still positive. We gapped up and then tried to really break out here and then gave a lot of that back. But overall, this is still looking okay, maybe a little vulnerable because of this gap. And mid caps just kind of moseying along sideways, up 1/3%, still positive with the Elder's Impulse system, and up a little bit here, just barely setting an all-time high with the Wilshire 5000 and the total U.S. stock ETF. And we were up, still above the 50-day moving average with the financial sector, but in the bigger picture, continuing to underperform the S&P. FANG index, not a good day, down a little over 0.5%, just kind of going sideways recently. So Apple was up 0.35%, looking pretty solid there. Amazon was down 1.33% in between its 50 and 200-day moving average, above the 50-day moving average with Microsoft, up 1/3%. And Google just virtually unchanged, down slightly here. Meta dropping here, but further below its 50-day moving average. Nvidia seeing a little bit of profit taking after setting some all-time highs and still looking pretty solid, even though it was down 2/3%. Tesla, after they reported earnings, we saw buy the rumor, and now we're continuing to see sell the news as Tesla's been pulling back. And Netflix continues to drift down more below its 50-day moving average. And still seeing more of a positive correlation in the short term between US and world stocks. A little bit of a build up here with the longer term correlation. Oil is now getting down into the 60 range. Even though it was up, we've been drifting lower overall. And the dollar continues to be in a downtrend as well. And we're back up a little bit with the 10-year yield after we had been declining. So we're going back down here with the 10-year based on price after we had been advancing. Still looking pretty good, even though we declined with the Q to S&P ratio, but we're above an advancing moving average. We're seeing some weakness starting to come in with discretionary to the S&P. That's falling below now a declining moving average. We did decline, but we're still above an advancing moving average when we compare large cap growth to value. And we're declining here with the large caps. The moving average is starting to go down. Still looking fairly solid with the mid caps. And we're above the moving average now with the small caps, even though it did decline in Friday's session. So we're still positive and we're above support, whether it's the 20-day moving average, the weekly pivot points, the 6,700 level. We do have support underneath us. Plus, I didn't show the chart, but there's these anchored weighted moving averages that could also provide a support level if we start to see a decline. But we're not really seeing a decline. So we're just keeping an eye on those support levels. And we do have positive conviction in the short term, but it is waning a bit. And then we're not supposed, this is actually on the calendar. We are not going to get any economic reports on Monday. And then anything geopolitical happening here. We've got the baseball playoffs, you've got football, and that's what a lot of folks, including myself, are fixated on. Go Seattle Mariners. But all the crazy stuff that's happening, the protests, the divisiveness that's going on in the culture, all of that stuff that's happening, not having an impact on the market, but you see a real escalation in that, and it could change. So here is what we think is going to be the economic calendar for the upcoming week. And we're actually, I use two calendars. There's this one that I get from briefing.com, and then there's this one from investing.com. And they're actually contradicting each other because they don't know what's going to be happening here. But really, the big thing in the upcoming week will be the meeting minutes from the FOMC. We didn't get jobless claims this week, so we wonder, are we going to get them next week? And then consumer sentiment will be coming out on Friday. Now, here they have the employment report. They pushed it out a week. We were supposed to get it on October 3rd. Now they're thinking we're going to get it on October 10th. So check it on a day by day basis based on what's going on with the government shutdown to see just in fact what reports are going to be coming out. Then seasonality for October 6th, which will be Monday, that is positive for the Dow and neutral to positive with the S&P and Nasdaq. It's also still seeing some positive seasonality for the next couple of days. When you look at post-election years, the green dashed line here for the S&P, before we see a little bit of short-term weakness and then a little bit more strength going into the middle of the month. We are in the third best performing half month, the first half of October, going back to 1950. This is longer term. We're still holding up quite well, no matter how Stock Traders Almanac tries to calculate it. We're above all of these lines and possibly continuing to go up here. September tends to be positive, going back to 1950 during post-election years. This also shows how October is positive. This is a newer chart here put out by Carson, where no matter how you slice and dice it, October tends to be good going back to 1950. So this yellow area, that's everything going back to 1950. The blue, that's the last 20 years. Green, last 10 years. And then black is post-election year. All of them are positive. And then I'm starting to mark this up. This will be for Monday. This is October 6th here, where companies are going into blackout period as they're getting ready to report earnings. So the warning signs are I've changed the smart money indicators over to the negative side because the boom indicator is looking negative, even though in the longer term we're positive with accumulation distribution. But we are negative with the Chaikin money flow and the Chaikin oscillator after being extreme. It's now starting to go down. And the NYSE McClellan Oscillator and Summation Index improving, but still below zero, still going down with the Summation Index. We're drifting now, but not seeing any real weakness, but not seeing an awful lot of strength here with our S&P momentum oscillators. And then on the positive side, still looking good longer term, growth to value, discretionary to staples. It's shorter term that sees the market getting more defensive. Positive with the McClellan oscillator and summation index for the S&P, swirling trading oscillator. Bullish percent indexes, especially for the S&P, is positive. Ease of movement, money flow, ultimate oscillator, and vortex are positive. We do have a pring bottom Fisher buy signal, even though what kind of a bottom are we hitting right now? And the momentum is still hanging in there and looking positive for the Nasdaq 100, the financial sector, but continues to underperform the S&P. And then I'll be doing this chart, both the daily and weekly chart, over the weekend. It's a special K, very long-term momentum oscillator. That continues to be positive there. And here are the pivot points for Monday's session. Here are the monthly pivot points, which we look at on a daily chart here, just hanging out right around this R1 point, which is just a little bit above 6,700. So our conclusion, we're still positive and we're above support. In the short term, we're seeing more mixed conviction. It's still leaning positive, but drifting now. And we're still watching those 20 period moving averages if we decline. And we're seeing some weakness in the intermediate term, but we're also seeing some improvements, just not a lot of conviction right now. And in the long term, we're positive, but we're still above that 11% level when we measure the distance above the 200-day simple moving average. Thank you. I hope you found this helpful. Have a really good weekend, and I will talk to you in the next video.